What's going on, everyone? This is episode 3 of the Gold Bootcamp series, and in this episode, I'm going to be backtesting data, going over some of my losses, and how you guys can improve on the strategy if you guys have been practicing it. So without further ado, I'm going to go on the charts, hop on, go over a trade recap that I lost on, talk about why I lost, and then just put those key points into a backtesting session for you guys so you guys can actually see how it works simulated in real time or real market data. All right, I do want to apologize for the camera quality because I put on my LED lights and now it's like really bad. So I apologize for that. But as you guys can see, I took a loss on the 30th, which was actually the 29th. But because we're trading Asia session, it's the following day that counts because it's the next trading day, even though US is like a whole day behind. But regardless of that, you guys can see that I lost money on this day, ending this week or ending that last week negative, right? So I'm going to be going over what exactly happened and what I saw that made me take this short and eventually end up losing, right? So if we scale out on the higher time frames, we had so the 4 hour was highly like bearish, right? Because we had inversed all this bullish momentum here. And in the previous episodes, I was like, we are going to be bullish. We're going to just continue higher. All you have to do is press long. Not the case anymore. We inversed all of this bullish momentum with these 4 like Drake candles down. And these candles pretty much signified that there's not that much bullish momentum anymore. Okay. And with this signaling, I was looking for shorts, obviously, because you base your daily buys off the higher time frames. Also, we had a 4 hour bearish fair value gap here that we did tap into literally with the first 5-minute candle, which was a very good sign. Or I think it was the second 5-minute candle, if I'm not mistaken. Yeah, we tapped into it, which was another very, very good sign. We additionally had draws on liquidity here that we swept. We also had this draw here that we did not sweep. All right. And this is very, very important. This draw is pretty much what ended up making me lose my trade. All right. We also did have this 15-minute, but we had already retraced back into it. So I wasn't looking at this as a prime contribution or a prime confluence of why I entered my trade. So now that we had this original big down move from New York session, I wanted to see a retrace, which obviously happened with this leg up right at the new day open. So it was 17 o'clock for me. So we had this retrace, right? Now all I'm waiting to see is the highest time frame inversion to enter this trade and then put my stop loss at this retracement high. All right. That actually did not end up happening, and I'll explain why. So obviously I did follow my strategy. We had this 5-minute candle here, and then we had both of these 5-minute candles, which we formed, and then we had a 5-minute bullish fair value gap here. So I was like, cool, if price inverses this 5-minute bullish fair value gap, since we had already taken out this high, I didn't believe we were going to retrace back into this 1 hour fair value gap here. That was this high, right? So this high that I marked out originally, how I said this high was important. We didn't retrace back into that area, which kind of scared me. And this is honestly the whole reason why I lost this trade. Not that I risked too much, but I didn't think this gap would get retraced back into because I thought this was going to be a breakaway gap. For those who don't know what a breakaway gap is, it's pretty much a gap that doesn't get like retraced back into or doesn't get tapped because we had already, and I thought that because we had already retraced back into this 4-hour gap. And I was like, this 1 hour gap isn't as significant as a 4 hour. And even though we had this high lasting above us, I wanted to take the trade just because we had swept this liquidity. Very bad idea, because what ended up happening was if we send one more 5-minute candle, we formed pretty much relative equal highs because yes, we had swept out this high here, which was a draw on liquidity, but now we formed relative equal highs with a 1 hour fair value gap above us, which was literally my sign to not enter a trade. Yet what do I do after the 5-minute inverse? I enter there, and then I had my stop right here, targeting this draw on liquidity here as my main TP. So I had break even and then main TP here. And then I was actually also like going to hold one contract to this daily bullish fair value gap. Was this pretty unrealistic? Yes. But I was like, if it works, it works. I really like the displacement previously to the downside, right? We had inverse all of this. It was a bearish inverse fair value gap. We were going to form we probably did form, yeah, we formed a 4-hour BPR gap. I also forgot to mention that. So yeah, we didn't retrace back into the BPR, but we were just proving on the higher time frames that we are bearish. And I was like, this is cool. This is exactly what I'm looking for to take my setup. So I take it, right? And then I had my main TP here, and then again, so like this. So pretty much a 4-hour trade. And basically what ended up happening was I wanted to at least see this low get pushed through and get broken. And then if we are going to retrace higher back into this gap, I was like, we at least have to take out this low. We at least have to fill more orders before going back up and then maybe doing whatever else we want to do. I was wrong. All right. So what do we do? Let's just sim out how this actually played out. We had a lot of chop here. We were moving up, but again, I wasn't worried about this. I was confident in my setup, even though we still had relative equal highs and a 1 hour bearish rally gap above us. Um, Again, pretty much nothing. Now I was starting to get a little worried here because I was like, the only way I enter or I exit short, meaning that I just manually exit closing my position, even if we didn't hit a stop loss, was if we inversed this 5 minute BPR, which was here, right? If we close above that, I would be closing my position. Why? Because if I'm going to enter off the highest time frame inversion and the highest time frame inversion gets inverse, that means that the inversion is no longer helpful to us because that momentum, right? In this case, that retrace, the highest time frame inversion, this this move down is no longer useful to us if we're going to inverse and come back up, right? Because if we're going to come back up, we could sweep even more things before then going lower, right? So then it's going to be a bigger retrace, and you just don't want to be in a trade like that, right? I was also looking at the standard deviation, like marking out the high to the low. What did we also talk about in the last video? 78% mark. I was like, cool. If we're going to close above the 78% mark from this swing high to this swing low, both of these are internal highs and lows. I was like, we're going to continue higher, definitely taking out these highs, these relative highs, and then tapping into this 1 hour, tapping into the 4 hour BPR higher, and whatever else we wanted to do. So I'm like, cool. If this is going to happen, I'm going to enter short. I'm going to exit short. And I'm just gonna risk less money, and I'm fine with that, right? So we close, we edge it, we don't close above this, and then the next 5 minute candle we close here, inversing this gap, and then inversing or just denying the 78% mark. That's when I closed here, not that. I closed my position manually here, taking a loss and ending the year off. What I did wrong, again, I probably said it 5 times in this video, but do not trade. Now, this isn't my main point. This is literally my whole main point of this is do not trade if we have a fake breakaway gap. And now you guys are gonna be like, how do you know if it's a fake breakaway gap or an actual breakaway gap? If you have a fair value gap that is above you, right? So let's just say this was the retrace last time from inversion. Let me just move this so it's more clear, right? Let's say we have no, I'm just gonna redraw that. All right, let's say New York session down. We form this high, boom, this high, boom. We sweep this, and then continue lower. This is literally exactly what happened today during this day, right? We had this high here that we had swept, obviously, right? That was the drawn liquidity that we swept that I used to enter my trade. But then we had left this high. We had left this high, pretty much relative equal highs, which are very good price ranges for the market to go to because they fill a lot of orders in these price ranges. And we had a bearish fair value gap here that was formed by this high. So since we didn't touch this, I should have waited for price to come back to this area, right? So let me just undo that. What did I just do? All right. All right. So even if we are down here sweeping these lows are not as significant because I really like this drawn liquidity. That's another reason why I entered this trade. I really like this low and then this low. And then I was like, if we are going to push all the way down here, so be it. I'm going to leave one runner to here. I really like these draws of liquidity because they were so obvious to me. They were literally like pointing at me. And I'm like, this is how Asia moves. And honestly, I'm not mad at the setup, but I should have again waited for price to retrace back into this gap, taking out these highs, and then continue lower. That ultimately did actually, I'm not even sure if that happened. I just hopped out the charts. But other than that, I mean, I'm going to show you guys this loss because it is a loss that you guys can learn from as much as I can learn from because, again, nobody is perfect. This is an A-plus setup, and I just did this wrong, right? We came back into this gap, sweeping these highs, and then we have somewhat of a bearish reaction from it, but then again, a lot of chop, and then we move higher, right? Not ideal at all to be in these trading conditions, and that's just literally on me. So if you guys are taking a loss or something like this and you're going to be journaling it, right? What you did wrong, what you did right, what you could improve on, what your emotions were like, how did you act, how did you feel during the moment of the trade, right? Because that's going to initiate how you actually felt and what you guys actually did to just to just like learn from it. Because if you guys know what causes you to lose and you learn from it and you overcome that issue, you guys are not going to lose as much anymore. It's pretty simple. So that's just it. I'm not even gonna lie, that's how all of my losses come from. And this is me identifying the thing that I do wrong and identifying what I could do better. Now, I'm gonna go back test some data and just go back in the past and just back test, see how my strategy plays out on camera, just so I could show you guys and you guys could see how I think, how I actually execute in market conditions. And yeah, so I'll be right back in the next video. You guys are going to see me back test.